Good evening, all. It's Sunday night. This is Shay Horowitz, YogaTrading.com. Want to talk a little bit about the market. We have been in a very strong downtrend, as probably you know and everybody else knows. The market has been in a downtrend because of slowing economy. Why is the economy slowing? Economy is slowing when people are frozen, when people don't want to buy houses, when people don't want to sell houses, when people don't want to buy cars, they don't want to sell cars. It happens when people hang on to their dollars. They are saving up for emergencies and stop spending. Whenever people stop spending, then there is less purchases. Therefore, there's less business, and the whole economic cycle basically slows down. The reason why the real estate market slowed down is because people stopped buying. People said, okay, this is the top. I'm going to sell, sell, sell. And whenever people sell, 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 and everybody's not buying, it starts tumbling and creates a whole cycle of mess. Who do you blame? Basically anything, anybody that's frozen, anybody that's hanging on to their dollars. And frankly, I see that among my friends. I see that among the people that are around me. They see that business really slow down, and business really slow down, and they admit themselves that they're saving their dollars. They're saving their money. They said, we cut out all expenses, and we want to see what will happen. We want to see what will happen with the next administration. Regardless of your political take, the next administration is very different than the current administration in quite a few forms. One of them, of course, is capital gains taxes. The new administration wants to raise capital gains taxes. If you are part of the investment community, capital gains taxes mean a lot to you. So what do you do if you know that you're going to pay more capital gains taxes next year than this year? You sell this year. And that's exactly what people are doing. People are selling in anticipation of the new tax system, the higher tax rates, and so on. There's also quite a bit of talk about reforming a 401k system where less of the 401k money or none of the 401k money will actually go into the stock market, which could be absolutely devastating for prices of stocks. This is all out there, and the market knows about it, and the market is selling in anticipation of it. The market does want change, but the market is curious what kind of change it is. The market is afraid of bad change, and because bad change could really, really hurt the stock market. Remember that the stock market always trades 6 months to a year ahead. The market is an investment market. It's not a reaction market. People don't invest because the stock is going up. People invest because they expect the stock to go up. People sell the stock because they expect it to go down. And that's exactly why the market has been diving, because they expect they expect different policies that are not stock market friendly. Unions are not stock market friendly. For 401ks are the destruction of 401ks is not market friendly, and capital gains taxes, of course, are not stock market friendly. That's without getting into the politics or anything. I have to skirt around the issue because everyone's got their own political opinion, but I'm really, really trying hard to just focus on the stock market instead. So anyway, so that's the explanation of why we've been in such a strong downtrend. So where do we go from here? Based on that, where do we go from here? Well, the market is trying to stabilize right now. Notice that it stabilized right around elections time. It stopped moving because it wanted to see what the results were. So elections came out, and then we had Wednesday and we had Thursday that were very strong down days. And then we had Friday was a little bit of a recovery day. Friday also had a news conference by the new president, and the market reacted to it with quite a bit of noise. But that's Friday. So what's going on? What's going on today? Today the market looks like it wants to go up. I'm looking at the S&P 500 futures. They're up 20 points. NDX is up 20 points as well. Looks like the Dow futures are up 200. What I think is going to happen right now, I think we're going to stabilize a little bit. I think we're going to go around this area, something like this. It's the S&P 500, by the way. S&P 500 is my favorite index right now. I think we're going to consolidate. I think we're going to go sideways for a little while. After we go sideways a little while, you're going to see the red line, the 200-day moving average, the blue line, which is the 50-day, and the 21-day consolidating, getting closer and closer together. Whenever they get closer and closer together, that's when we're going to see a new trend. So my trading plan right now is very short term. I'm looking for a quick trade. I'm looking for 3 day trades. That's about my time frame right now. I'm looking for 5%, 10% pops. If I can do that in 3 days on a consistent basis, 5%, 5%, 5%, 5%, 5%, it adds up quite quickly. This is not the time to look for those big runners. It's not the time to look for the stock that you buy to make to hold on for 3 months. You have to focus on stocks that are capable of moving a lot more in a much shorter period of time. And that's what we're doing right now. What I'm trying to do is to catch all these small waves that the market is doing, the up and then the down and so on. Catch those little waves. Let me show you. This is a daily chart since 2007, so beginning of 2007. You can see how much we're down. I'm going to show you the same thing on a weekly basis. And you can see how far down we are. Let me get back to daily. And what we need to happen right now is the cross of all three moving averages, as you can see right there. That's what started the long-term downtrend that you see over here. We have quite a ways away before all three of these consolidate and get back together. And then we'll be able to get a new, fresh, long-term trend. In the meantime, we are catching a few days, and then we're going to do a week trades, then we're going to do 2 week trades, and then as the trend progresses, we'll do that. I'm going to start giving you some stock picks. I want to give you some stock picks on a longer term basis. My goal is a week hold, 2 weeks hold, and then a month hold on stocks. The goal is going to be 20% to 50% return per stock, and that's going to come up. Not this week because I couldn't find anything that really looked good. I'm waiting for the market to consolidate a little bit, give us more of a direction, and then we'll start giving you some stock picks as well. So our stock picks in the past have performed extremely well. For example, we had RCL. This is the stock we gave you. We shorted over here, and you can see that it did pretty well. We also did Pulte Homes, and quite a while back. This was our entry point, was over here at 24.43, and so we took the whole real estate industry down. So more of these stock picks are coming as soon as we get these long-term trends. Dow Jones Industrial Average, which is another major index, I watch it a lot less than the S&P 500, even though it's more popular. That one looks pretty good as well. Basically the same thing. Also, all the noise is out. We're consolidating right now. Just looking for it to stay in this range. NDX, which is the NASDAQ 100, top 100 stocks in the NASDAQ, also 1400, right around here, also consolidating. We're looking for the next big trend. I want to show you oil, and you can see that oil went straight up and straight back down, and right now we're actually below to 2007 levels, which is very interesting, the dive that we took. Remember, the best cure, I was saying it before, the best cure for high oil prices is high oil prices. As a matter of fact, we called this top on the oil. If you look back in our newsletters, around this time, you'll hear me talking about how we called the oil top. Should have shorted oil, huh? Gold, measure of inflation, of course, has been taking a beating because inflation is not quite the concern right now. We're more concerned about growth or lack thereof. Anyway, that's all I have for you for tonight. Keep looking for the stock picks as the market consolidates. I will update you. Stock picks are going to be great as always. Have a great week, and I'll talk to you next weekend. Take care.